Hey guys, what is going on? My name is Dave and I'm coming at you today with a video about AMC. So, as you guys know, there's been a ton of information going around. A lot of it being real good information, but also there's a lot of fake news going on, as everyone knows, from the media, but also from some of the people on Twitter and Discord and Reddit. So I really just wanted to post a video about everything that I found and all the research that I've been doing on AMC. And then also some things that go really above and beyond AMC, but also how it comes back and relates to that. So first of all, I just want to show you this chart that I've been looking at, and it's really been floating around all forms of social media. So of course, this is your basic wedge pattern here, which looks realistic and looks like we're about to have this breakout in the next couple of days, probably sometime next week. But what I really want to clear up is this could not happen. This is a perfect technical setup, but really what's going on with AMC is really behind all logics that are going on. And what I mean by that is the technical levels, the price that we see today, and then this chart in the wedge pattern almost has no relevance to what may happen in the future. So let me take a jump into some of the numbers that I've been going through and what I researched today. So right now, short interest is at a record of 23.52%. Utilization is at 100%, and it has been for all of last week. And of course, probably going into Monday, we'll see that the same. Shares on loan, another record, 153.78 million. But the biggest thing is, guys, we can't trust this data. And the one question I kept on asking myself is, if we're at 100% utilization, how are there still being shorts? And how are there new short positions being created every single day? That makes absolutely no sense. So that really got me thinking and started digging all around the internet. So today I started watching Lou versus Wall Street. Hilarious guy. Really a real genuine person who is not here for this fame, not here for the glory. And like he says, not here to sell t-shirts or anything like that. But really was just trying to get all of the information out to us. So pretty much, you don't have to go through all of his videos. I'm going to summarize that up for you today. But pretty much what he was saying is Citadel and Citadel especially, is executing just about all the trades from Robinhood, Webull, sorry, I can't think of the name here, Fidelity, there we go. In all of the platforms that all of our retail traders are using today. So what they're essentially doing is, let's say me and 9 of my good friends are buying 100 shares each. We send that trade through Webull, who then goes through Citadel to fill that position for us. Citadel is actually not giving us 1,000 shares to me and all of my friends. What they're essentially doing is they're going to say, here's 100 shares, and we're going to fill those 900 shares at a later date, because they expect that there's going to be people selling, and they'll just give us those shares down the road, maybe in 1, 2, 3, 4 business days, whatever it may be. But essentially what has happened is us apes are not, we are very different from ordinary investors. So when hedge funds were really trying to drive that price down, what I really believe it was they owed shares to a lot of people, and there were so many fake synthetic shares being traded around. So myself and most of you guys right now, we are not, I right now have just about 1,500 shares worth of AMC. I can tell you, I probably only have a few hundred shares of AMC, and most of the shares that I own today are probably most likely synthetic shares. That's because when they were driving down that price, they wanted us to sell so that they could actually give us our real shares back. Of course, we are different, like I said, and we continue to hold through just about all of this. So with their pretty much algorithm and computer software, they're able to do this within milliseconds every single day for the past, 4 or 5 months. And this is obviously going on well before any of us traders really picked up on this. This has been happening since, years and years and years, and I can't even put a date on it. So the question I ask myself is, there's got to be a way around this. How do we beat this software? How do we kind of defend ourselves from this? And we've actually been doing it without even realizing. The one thing that we can do that is the most powerful thing is actually hold those shares. And the reason for that is because they actually can't provide us those shares back if we are not selling. They physically do not have enough shares. And then I've heard a lot of other YouTubers, a lot of people on Reddit, a lot of people on Discord saying that, the float of AMC is just about 450 million or whatever it may be. But there's actually most likely 4 to 5 billion shares, if not more, currently floating around. And that's because of this high frequency trading that Citadel Securities is doing. And of course, there's others that are doing this as well. So one really interesting point that Lou made in this video was he was saying that, the first spike that we have, whether it goes to $100, $1,000, $10,000, when we sell, since we only have fractional shares, we may only sell even though the price is $1,000, we might only actually sell at $60 because we don't actually own those shares, a full share of AMC. So really, my strategy of when this does kind of pop off and, as many people will say, go to the moon, is I'm just absolutely going to hold on and wait for all of those synthetic shares to be bought so that those fake shares can kind of go out of my account and I can have those real shares so I can sell at the full actual price. So that's something I really want you all to be kind of watching. So another interesting thing was I was on Reddit. I came across, of course, there's been a lot of talk about this DTCC stress test that is going on. So usually, and this is what I found super interesting here, it's usually an annual test that goes around sometime around August. It actually already happened in August. But right now we're doing an emergency stress test, which of course sounds a little fishy. So let's jump into this report right here. And I'm sure a lot of you guys have already seen this. Let me just zoom out a little bit just so I can read it on my screen. So the date of this was April 20th, just last week when this came out. And the biggest thing here is netting members. That's really the key word that I picked up on. This was something I really wasn't too familiar with, and I'm sure a lot of you guys aren't as well. So this is Investopedia right here. Let's go through what is netting. So netting entails offsetting the value of multiple positions or payments due to be exchanged between two or more parties. It can be used to determine which party is owed in multi-party agreement. Netting is a general conception that has number of more specific uses, including in the financial market. So what are really the key takeaways of this? Netting offsets the value of multiple positions or payments due to be exchanged between two or more parties. Netting is used in a number of settings and instances, securities, or trading, currency trading, bankruptcy, and intercompany transactions, among others. Keyword there, bankruptcy. Why would that be relevant? Netting can involve more than two parties, called multilateral netting, and generally involves an exchange or clearinghouse. Another very interesting point. So, of course, I know a lot of you guys know that JP Morgan just set up 17 netting accounts. So, what I'm getting from a lot of this, and I could be wrong, but really what I understand here is JP Morgan is getting set up for something very big here. How this says bankruptcy. It involves exchange or clearinghouses. So what happens if JP Morgan is setting up those 17 netting accounts because they're getting ready for others to default on payments, and they're getting ready to pretty much come in and pick up a lot of these securities at a highly discount. That's something to really take an eye on here and just be aware. So let's get back into some of my notes here. So the netting account is used for the commercial mortgage-backed securities, CMBS. And essentially why this is going to be going on is because a lot of people, including the DTCC, thinks that these companies are over-leveraged and have been cooking their books for a very long time. And this is really kind of coming out, and the DTCC wants to figure out what is going on and what happens when this bubble is going to pop. So really, they just want to get a procedure in place to be prepared for when this does happen. So back to the stress test and why this is going to happen. So they're testing the mortgage-backed security division, like I said here, and any members involved to make sure that they have management of liquidity risk under control. And funny enough, Citadel is actually on this list here, and there are 120 others who, some of the names, most of the names, really I have never heard from before. So the biggest thing is they wouldn't do this if nothing was going wrong. And if there were no issues, if everything was good, they would do their annual test. That's totally fine. But for them to do an emergency test, that's fishy to me. And I really, really am curious as to what happens Monday and how this does go. So there was an interesting article, which I don't have pulled up here on my tabs, but I will link it on the video right after this. So it was called The Bigger Short, Wall Street's Cooked Books Caused 2008 Financial Crisis, and will be happening again by The Intercept. That was the company that posted this article. So what they pretty much said was actual net operating income falls short of underwritten income by 5% or more in 28% of loans. And that was the average. So Citigroup, Goldman Sachs, Morgan Stanley, the Royal Bank of Canada, and more were actually significantly worse, which essentially means these companies are so over-leveraged at this point. And if that doesn't scream bubble to you, then I really don't know what does. And then, like I said before, JP Morgan just raised all this money with bonds. So JP Morgan came out, I believe it was Tuesday or Wednesday of last week, saying that they're going to raise $13 billion worth of bond, which is a record. A day or two later, Bank of America then comes out and says we're going to raise $15 billion worth of bonds. So this is crazy, guys. This is so much money being raised. And to me, it can only mean one thing. It's because there are some severe liquidity issues in the market right now. And they're really just trying to get ahead of all of this. So, like I said before, they're really just trying to get ahead of this and raise as much capital as they possibly can to cover the losses in the mortgage-backed security divisions or fixed income securities department. And a lot of you right now might be asking, okay, this is really weird, but super interesting, but how the hell does this relate to AMC? So this does relate to AMC because when the DTC comes out and finds that certain hedge funds and other companies are way over leveraged, you know what's going to happen. It's going to be a margin call. So we've actually, in the previous weeks, we've seen a few firms actually come out, get margin called, and there were some huge losses. So on the flip side, this works in both ways. A lot of those positions were actually on the long side, but of course we know that Melvin Capital is super short on AMC and GME. So when they do get margin called, AMC is absolutely going to go insane, and it is going to skyrocket, guys. And it is going to be the mother of all short squeezes. So really, they all know what's going to happen. It's really just a matter of time at this moment. And the DTC knows it. Citadel already knows it. We know it. And really, it's just a matter of waiting, guys. Be patient. It's going to come, and it's going to be so great. But we can't rush it. We can't put a date on it. And I'm not saying with this information, with this stress test that is happening Monday, that it's going to happen on Monday. It could happen in 3 days. It could happen in 3 weeks. It could happen in 3 months. We have no idea. And whoever says they know, don't listen to them. It's absolutely fake news. Don't get your hopes up. You know what to do. We know how to battle against it. All we have to do is hold. It's literally the most simple thing you guys can do. So, interesting enough, Josh James, follow him on Twitter, guys. He posts some really great information. This guy really takes the time out of his day to provide us with super relevant information. So, I did want to just show you guys a few tweets of his that I found super, super interesting. So, I'm sure all of you right now have heard of CXC. This no-name cryptocurrency that went from like 9 cents to $3,500 just about overnight. Don't know how that is possibly happening. And Josh did post a few actually really good articles about crypto pairing. Definitely worth a read if you guys are like me, don't really know too much about the whole back end of cryptocurrency. But essentially what he is saying, and I'll jump over to this next tweet that he sent out, was there has been some real manipulation going on and some hiding of assets through cryptocurrency, which of course isn't new news. But pretty much what happens is you take $1, you put into Bitcoin, then you take those Bitcoin, you use the pairing, which of course read that article because that'll explain it into more detail. I'm not going to go into that. But from Bitcoin, you go to CXC, and then from CXC, you go to USDT, which is Tether, which is pretty much a stable coin. But those articles, I'll also post those down below. Definitely read them, and it'll explain that in much more detail. But really what I'm getting from that is people know that what's going to happen is not going to be pretty. It is going to be very bad. And I think very similar to what happened in 2008 when people were well over leveraged into mortgage-backed, not into mortgage-backed securities. I just had that in my head. But anyways, into mortgages. People were buying all of these mortgages up, and there was 10 people who were invested into one individual's mortgage, which were all defaulting, whole crazy back end story. But of course it went all to shit. We're pretty much in the same scenario as 2008, but right now it's a conversation of being over leveraged in the market instead. So what I'm personally getting from Josh's tweets is that people are taking their money and hiding it through cryptocurrencies because they don't want to have any US dollars. They don't want to have securities. They don't want to be invested into anything right now, because when this blows up, it's going to be absolutely terrible, and it is going to hurt a lot of people, a lot of investors, and it's going to be a scary time, guys. Also, do take a look at Trey's video that he posted last week. It was pretty much the video about House of Cards and how, all of the manipulation that has been going on for years is really just kind of becoming uncovered now because of a lot of us investors. AMC was really kind of just stuck in the middle of the crosshairs. And I think that's why a lot of us started digging into like what's going on with AMC and started finding a lot of dirt and a lot of information that kind of related to AMC, but related to a much bigger and larger issue at stake. So definitely check that out. So I'm going to end on that note, but guys, my one message to you is just continue to hold. If this doesn't play out, if this doesn't pop up like crazy, don't worry about it. The price goes down, don't worry about it. It may happen. This price could definitely go back into the $2 range, or we could go back up to the $20 range next week. No one knows, but at the end of the day, it doesn't matter. All this information is out, and it's time that Citadel and all these other hedge funds are going to pay up. And when it does, guys, I hope you're there with me because it's going to be life-changing. So on that note, guys, if I provided any information that you liked, please leave me a like, drop me a comment, follow me on Twitter, and subscribe. This is my first video, but I hope to be bringing you guys videos every single week. So on that note, guys, have a good night or an early morning, depending on when you're watching this, and I'll catch you next time.